Quick video today, pretty much explaining what cash versus accrual basis is and why it matters for your business and will even affect your tax returns. So to start off with the more simple of the two, cash basis for financial statement purposes and tax purposes, essentially what this means is you are just recording revenues and expenses when you receive them or pay them. So for example, if you invoice someone for services you've performed and you do not collect on that invoice for 3 months, in 3 months, that is when you would record the service revenue associated with that. Now for an expense, it has to do with when you actually pay the item or pay for the payroll. Anything that you're paying for out of your business bank account, that's when it's actually going to be expensed. So it's pretty straightforward. Revenues are going to be recorded when they're received. So basically when you get an ACH, you get cash, you get a wire transfer, anything like that related to revenue, it's going to be recorded. Expense, anything going out of your business bank account, ACH, wire, payroll, the expense is recorded when it's paid. So that's cash basis. It's pretty simple. The major benefits of cash basis is acceleration of expenses at year end to help offset a high net income that you're trying to get rid of, or a deferral of revenue due to not collecting on certain revenue during the end of the year. So those are the two major benefits. Now, the little more complicated status would be accrual basis. So accrual basis is actually probably not used that commonly on small businesses. It's going to be more used on the bigger companies, the S&P 500, the Russell 1000, big private entities or the public entities that I just mentioned. So think of companies like Amazon, Walmart, Target. They're going to be using accrual basis. That's because they have to pretty much follow GAAP. I'm not going to get into what GAAP is in this video, but that's what all the public companies and large private companies have to follow in the United States. Now, accrual basis major benefits are going to be, actually, before we go into benefits, what it actually is accrual basis is you're not recording revenue or expenses when they're either received or paid. It's going to be you're recording revenue when it's earned, and then you're recording expenses when they're incurred. So you have to figure that out as an accountant now or a business owner. When did you actually earn that revenue? So normally revenue is going to be earned when this performance obligation is complete. So for example, once you do the work that was in your service agreement, that's when revenue is earned, not when you actually receive the cash. So under accrual basis, if you receive cash up front, you're not going to be recording revenue until the actual job you were hired to do is complete. Now, there's lots of different methods, percentage of completion, things like that. Basically, as you record revenue as you go throughout a contract. Now, the main thing to remember is when revenue is recorded when it's earned, not when cash is received under accrual. Now, expenses, in a similar way, they are not under accrual basis. They are not being recorded when they're paid, but when they're incurred. So essentially, the good example I always like to use here is going to be like a prepaid expense or basically payroll. So the easiest thing with a prepaid expense is, let's say as a taxpayer or business owner under accrual basis, you prepay your rent for a year. So under accrual basis, you can't expense all of that at once. You have to capitalize it into an asset called prepaid rent. And then as each month goes by over the next year, you're going to expense that asset, basically recognizing the expense on the income statement. So this is, in another video, I'll go into deferrals versus accruals, basically adjusting journal entries, but that was actually just an example of one. Now, another example of an accrued expense would be payroll. So payroll is actually incurred when the person is working for you, not when you pay them. So depending on the timing of when payroll is done, sometimes certain payroll has to be accrued at the end of the month due to payroll may be the second Friday ending the first week of the next month. So 1 month has to be accrued in the prior month and 1 week has to be accrued in the next month. So it's really important to make sure you know the difference between accrual and cash basis and know what your entity needs. What I would say is most small businesses should be in cash basis. They're not going to see a lot of benefits from accrual basis because a lot of the tax strategies that they can implement at their level is going to be really beneficial under the cash basis. So that's the main difference between the two. You could really go into the two. There's entire chapters on textbooks taught on them, but really just know the difference between the two and make that good decision for your entity on which way you want to go.